We are joined by our investment committee today, Steve Weiss, Kevin O'Leary, Joe Terranova, and right here with me on set, Liz Young. But first, let's get a check on the markets. The major averages edging higher again. The Nasdaq on its longest winning streak since April, getting pushed higher by Tesla, benefiting from that Inflation Reduction Act. Right now, looking at the 10-year note, yield right now at 2.777, 3 sevens. That could be lucky for somebody somewhere. Right now, the Dow up more than 100 points. Let's just get right into it. Liz, you're right here with me. What do you think? Are we in a bull market? Are we in a bear rally? What are we doing right now?
I think that valuations at this point are a little stretched, given that nothing has really changed that much. And we've seen over the last few weeks a lot of multiple expansion. That's on the heels of all the multiple compression that we had in the first half of this year. But the reality of this situation is, after seeing those jobs numbers from Friday, Fed is not stopping anytime soon, and valuations are above where they normally are when inflation is at these levels. So I think because the second half of the year is still going to see us fighting inflation, trying to call a top in inflation, and we would need to see it to come down very, very quickly in order to be satisfied. But I do think that we probably have to get valuations back to a little bit more of a reasonable level in the month of August.
All right, Weiss, over to you. I mean, you're generally bearish. Are you still bearish right now after what we've been seeing for the last few weeks? And honestly, the market's responding to some somewhat disappointing earnings and kind of just shrugging them off.
Yeah, look, I did put on some exposure, some meaningful exposure, and caught some of the rally. But my base case is the same, which is we get into September and October, and you really start to see the impact of the tightening, which I don't believe we've seen yet. It'll be a different story in the economy. It'll be a different story in the markets. So I agree with Liz. You've seen multiple expansion because earnings have been coming down, although they did better than what was expected. But that is always the case. I don't think there's an earnings period where they did worse than expected. So I would say at this point that, we're still okay here for now, but it's only logical to assume that nothing goes up forever, particularly in a Fed tightening. So, which is what we're seeing. So look, I'll start taking off some exposure. I put stops in some of the trades. Maybe I get stopped out as they come down. But to me, this is a rally in that the general trend in the market is lower. However, I don't think we break the lows that we recently saw. I think we'll revisit them, but perhaps, as I said, not for a few weeks.
Weiss, let me push back for a second. I mean, you say nothing goes up forever. Doesn't that include inflation? I mean, a lot of people think that CPI will be slightly lower. We may have hit peak inflation. Isn't that going to just basically be a relief valve for the markets and give them the ability to rise as we go forward for the second half of the year?
No, because the Fed is still going forward. So if inflation comes, everybody points to commodity prices have gotten crushed. They're down 35%. So take your inflation down 35%. You're still at 3 to 4 times what trend inflation should be that the Fed wants. So that's why the market's moved up, because commodity prices have come down,
right,
and because because Powell maybe misspoke in his press conference. But the fact is, the Fed is determined to put a lid on inflation, and they're going to, and that's going to impact the economy. Plus, you're going to see, I think, offsetting that slightly is an acceleration of buybacks before the penalty on buybacks takes effect next year. And by the way, I don't think it'll be a ton. 1%, who cares? 2%, who cares? But look, so the market's okay now. Inflation's coming down, just not enough, not fast enough.
Yeah, we're going to touch on buybacks in just a second. Joe, I want to go over to you. Where are you at right now? I mean, is this rally for real?
Well, Frank, and first of all, good to see you. I think we'll know the answer Wednesday at 8:30, whether in the market could extend and elevate above the June highs, and that's where we are right now. We're pressing against the ceiling, and we're seeing if we could break out through the ceiling. The June highs at 41.77. On an intraday basis, we got above it today. We've pulled back a little bit here. You're seeing some weakness on Apple and Amazon and Microsoft. That seems to be the catalyst. But we'll know on Wednesday if we get the breakout. And if you do get that breakout, you're targeting now the 200-day moving average at 43.36. That's where your next stop is going to be. But I think the downside, and Stephen spoke about this, I see the downside is somewhat insulated and protected. 39.50 is probably your bottom spot. And I'm thinking we're in the month of August. Every day feels like Sunday. And you've just got a market right now that's going to kind of wrestle on either side of 4,100 until the calendar can turn into September, and you're going to get some more visibility towards the direction of Fed policy, of what a higher dollar is doing to earnings, and as we move towards the midterm election. So I think you just kind of have to understand where we are seasonally in the month of August, and don't expect very much.
Just to be clear, when you say Wednesday at 8:30, you're talking the CPI number. You believe it's going to have that big of an impact on the markets?
Well, it's the potential catalyst that allows you to break above 41.77, those June highs, with authority, settle there, and establish forward momentum that could take you to the 200-day moving average, or there's some form of general disappointment, which, correlates with the pessimism that's in the market right now, and we begin to see a lot of the recovery action since early July begin to erode away, and the market pulls back down towards 39.50. But I don't see us going very far below 39.50. I don't see us going very well beyond 4,300.